Hello, welcome everyone to a special edition of Story Trading. We have here today the CEO of QC Copper and Gold, Stewart, is here with us for the second time. First, a quick disclaimer: Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. This event is being recorded. Parts of it will be made available to both our VIP members on an advanced basis, and then it will be up on social media next week. Those who are not familiar, what is a story trade? A story trading is the art of understanding market pricing through the lens of the four pillars of fundamentals, catalyst, sentiment, and technicals. We have a private beta of our app coming up very soon. It's going to be the place to discover, collaborate, and validate market moving information through crowdsourced research and social collaboration. If you haven't already done so, please go to our website, put your email address in so you can be first in line to get the invite code for that private beta. VIP picks. QCCUF is a VIP pick. We have a whole bunch of VIP picks that's dramatically outperforming the market. So take yourself over there and you can look at the other stocks. We've had a lot of attention and notoriety lately because one of our VIP picks is up like almost 1,000% in the last 2 or 3 months. Air Test Systems, AEHR. We're getting a ton of people wanting us to present their stocks as VIP picks at Story Trading. So to manage all that, we set up a new vetting process. You can go fill out the form at storytrading.com/submit capital VIP to submit your stock idea. Now, QCCUF last trade, I didn't catch the close, but when I made this presentation an hour or so ago, it was around 337. This was picked by Chris Hampton. It's a 40 million market cap. It's up 100% since his May 16th presentation. Here's the chart we can look at real quick. And what we try to do at Story Trading is understand the chart, right? By studying fundamentals, sentiment, catalysts, and technicals, we can go into that chart and understand the story behind the trade, thereby allowing us to make better investment and trade decisions. And with that, I want to invite CEO Stewart back for a second time. I believe the stock is up. It was around 17 cents since we were here last. It's already up 100%. You did mention to us that you thought this had 5 to 10 multiple return possibility at that time. Curious what you think now. Specifically, Stephen, we'd love to hear about the recent raise and use of funds and perhaps upcoming catalysts for the next 1 or 2 quarters. So welcome back, Stephen. I'm going to stop my share and let you take it from here.
All right. Well, thank you, Ben, for the introduction and for the opportunity to be here today and update everybody on QC Copper and Gold. And also thank you to Chris. Chris was, I believe, the individual who introduced me to Ben and you all here in a VIP pick. And I thought we were doing great for 100%, but God, you got somebody up 1,000%. So I should subscribe to Story Trading. Maybe you'll give me a deal after this, Ben. Sure, but anyways, absolutely. So yes. So last time I was here, we had not released our resource, and spoiler alert, we did about 2 weeks ago, and that was the catalyst behind our 100% increase. And I do believe there's quite a bit ways to go. People are just starting to find out who we are and the value that this resource and our plan and our balance sheet represent. We think we have a mine here, a real mine in the heart of Quebec. And we say here it's a legendary mine reborn, and the mine we're talking about is QC Copper's flagship mine. It's called the Opimiska Copper Mine Complex. This was owned and operated by Falconbridge, who was a major mining company for many years here in Canada, and are now known as Glencore. And when they were operating the mine, it was 4 high-grade underground mines. And when we acquired it back in 2019, we spent a great deal of time in that data room, recreating the data room and digitizing it. And one of the first things, or early days, we saw that this was in fact a disseminated ore body. So whereas instead of just mining these high-grade veins, there was mineralization in the host rock, the hanging in the footwall, as they say. And so we saw that in the data, but we wanted to go and verify that. We raised a little bit of money in 2019. And drilled from surface 13 holes over 100 meters at ore grade mineralization. And that, to me, and to Charles, who's our key technical guy, that validated our thesis. Then the question was, well, how big is this thing? Okay. And then we waited a little bit because copper was cold, and then copper got fire post-COVID. We raised $5 million. And we deployed that $5 million by drilling 20,000 meters, 20 kilometers earlier this year, which all culminated in the resource, which we published. And just to fast forward, the resource is 2 billion pounds of copper, nearly 2 billion pounds of copper, pit constrained. Average grade is 0.85% copper equivalent, and 82% of that's in the measured and indicated category. So for those new to the mining industry, that is high confidence ounces. Most often you'll see maiden resources come out in the inferred category. We are in the measured and indicated. In fact, 60% is measured, which is the highest category. And why that's beyond the confidence level, what you can do is you can take measured and indicated, and you can upgrade it. You can use those exact same ounces and pounds, and you can put that into your pre-feasibility. Whereas inferred, you got to do a very expensive infill drilling in order to upgrade them to where we are today. And why do we have so much M&I? Well, because we leveraged that database. We brought it, we twinned holes, we brought it into the 43101, and now we feel we're off to the races. And so that's just a high level overview, and I'll just run through the presentation, and happy to answer any questions throughout.
Great, thank you.
So this is the corporate overview here. There will be some changes here, in particular to our baseload share position and to our shares outstanding. Ben noted a few things that he wanted me to highlight, and we announced two milestone financings. One is we did a deal with Cormark at 60 cents Canadian. Okay, so we were trading at about 40, and we managed to do what's called a super flow through deal, which is available to Quebec-based projects. It's almost unfair that Quebec's allowed to do it, but hey, we'll take advantage of it we can. But so we sold 60-cent shares with no warrants, and we're going to be raising probably $6.9 million financing out of that after the over allotment is absolutely going to be filled. In fact, it is filled, and that will close in 2 weeks' time. And so that's you'll just call it round figures, and an additional $7 million in cash.
Stephen, can I stop you 1 second, just so there's no confusion? You're talking about Canadian dollars, right? Not US?
All I speak is Canadian dollars. So
okay.
I'll leave it to you guys to do the FX. So,
okay, great. So just want to make that, so, most people in America here are looking at QCCUF, which is now 32 cents. So, just be aware of that, guys.
Understood. And my apologies. Thank you for pointing that out. But yeah, every dollar figure I will quote will be in Canadian dollars.
Great.
Because that's, we only play with the monopoly money up here, not the real greenbacks.
All right.
So in addition to that, we announced we are selling. Well, let me set the table first. We own 18 million shares in a company called Baseload Energy. Look at it today. It blew the roof off. We had in the last 2 weeks, we've made a discovery in Baseload, which is a company I'm also the founder and chairman of. It's led by a guy by the name of James Sykes. James is sort of the uranium guy here in Canada and is credited with finding NextGen's Arrow deposit. Look up Baseload, look up James Sykes. He's the real deal. QC Copper owns that position, which is, I think it closed at almost $1.30 Canadian today. We have 18 million shares. So this figure is dated, okay? And last week we announced we're selling 7.1 million of those shares. The terms have not been disclosed, but they will be very good terms, okay? So just because I have a control block, I'm not allowed to disclose it yet, but that will come out soon. So if you just estimate the proceeds from the sale of Baseload, and only 7 of our 18 million shares are being sold today, plus the financing, plus the 3 million cash that we currently have, we're in really good shape, shape. And all of those funds are going to be, short of a little bit of a pocket change to sort of promote ourselves and to maintain our listing, et cetera. That's going into the ground. We're about to announce a really substantial drill program, which I'll talk about in a minute. But first, I'm going to review the project for you. I know many of you were here a few months ago, but it's definitely worthy of renewal. So this is the open pit. So first, this is the Chibougamau district of Quebec. It used to be the copper hub of Eastern Canada, Chibougamau. Okay, 3 billion pounds, 1.5 billion pounds of copper, 3 million ounces came out of this camp. And not almost all, but the vast majority came out of here. And this is our Opimiska. And I mentioned before, it's 4 mines, 1, 2, 3, 4, the Springer, Perry, Robitaille, and Cook. Everything I'm going to talk to you about today in terms of the Opimiska is just related to these 2 mines we have yet to attack. digitize, drill out, robotize, and the cook. So there's still growth upside here, but there's still even growth around the Springer and the Perry. And then we've got our Roger project, which we rarely talk about, but it's 500,000 ounces at a gram. And it's on the rail, the whole project, both projects on the rail. This is the CN rail, major national railroad. This runs west to Rouyn-Noranda, where the smelter is, where we'll ship our copper concentrate. Power is on site, so the grid is there. In Quebec, it's clean hydroelectric power, and it's cheapest in North America. In fact, I believe your friends in New York buy Quebec power. Give me a second, please. My dogs are barking in the background there. My apologies. But anyway, so we have all of the infrastructure in place, including the paved highway, labor force, etc. And this camp here there's all former producing mines over here that are not really of interest to us. This is where the shallow mineralization is. This is what we've defined. And this is what the resource looks like. I'll just draw your attention, a lot of numbers here, but this right here, these are the two numbers here, and measured and indicated. If you add those two up, that's 1.926 billion pounds of copper. Pit constrained, meaning anything that's outside of an optimized pit, we're not even talking about yet, but I'll show you what I mean there. And then the average grade is 0.85% copper. Why is that? What does that mean? Not everybody really understands copper, but the cutoff grade is 0.2. And a mining engineer will tell you anything 2 times your cutoff grade is considered good. We are at 4 times the cutoff grade, which is considered excellent. So this is a high margin project with high confidence M&I, measured and indicated pounds of copper, and it's large. And this is just the beginning. And what do I mean by that? I'll show you. This is the Springer and the Perry. Okay, so those are these 2 mines right here. This is what our pit looks like. Everything within these optimized pits, these are conceptual pits, okay, so done with an algorithm to do the economics on what is economic to extract. This is the 2 billion pounds in here. Everything outside, okay, all this copper mineralization outside is not, we're not talking about it. It's not in our resource yet, but we're gonna get it. So where are we gonna focus? We're gonna focus on the saddle zone. Prior to this year's drilling, the 20,000 meters that we did, we had 2 individual pits, but we focused a lot of attention in here, which this was virgin ground, and we made it into a single super pit, which was significant. But there's lots more drilling definition to go, which is going to impact the tons, grade, and the strip. We also discovered a new area, what we call the eastern veins here. Again, this is all new ground, new mineralization to us. We don't have enough drill density to pull that pit over here to capture this, but we will. Same for the at depth. Okay, so when we were a fledgling sort of company, meaning our cost of capital was so expensive, we had to triage where we put our dollars, and we decided to put all of them in a in-pit scenario. So we ignored the mineralization at depth, but that's going to change. And why we know it's interesting is because this is the same image, but this is a grade distribution. So the red is the high grade stuff, and this is where Falconbridge, now Glencore, left 3 million tons of reserves at 3% copper right here. Again, this is not included in our resource, but it will be at the end of next year. That's a forward-looking statement, but I think that's entirely reasonable. So this is what we call the low-hanging fruit exploration and expansion areas of the open pit. This open pit, this 2 billion pounds, is going to get bigger. Okay, mark my words. I was here 2 months ago and I said we're going to aim for 100 million tons, and we deliver. It's 100 million tons, and mark my words, this is going to get bigger. Beyond that, beyond the open pit, so this is, again, ABC, that's the lower hanging fruit, the Springer, the Perry, and the eastern veins. I noted the Robitaille and the Cook. These are mines 3 and 4. Okay, we haven't digitized them, we haven't drilled them. This right here represents about 6 kilometers of 6 kilometers times 500 meters of a mineralized domain, which has never been systematically drilled for open pit mineralization. High grade veins, yes, well established, never been drilled, but it's chock full of copper and gold. So expect us over the next, let's call it 12 to 15 months, by the end of 2022, to drill this aggressively. We're talking 75,000 to 100,000 meters in this area. Today we have a mine. This is a mine. If we didn't add another pit, didn't add another pound, another ounce, we could put economics on this and we'd have an economic deposit. But we have the opportunity here to go fishing for something really big, like a Malartic, so a world-class deposit right in the heart of Quebec with all the infrastructure. So that's the optionality. And when I said, we're looking for 5 and 10 times our money, this is the type of opportunity that it delivers in a static market without copper going up, which I think it will, but I don't make those decisions. So that is the real play here. Beyond that, we've got 13 kilometers of this. This is open blue sky. The Gwillim Fault is the regional controlling structure which runs into Chibougamau. So the Gwillim Fault that goes in here gave birth to all these other mines on the east side of the camp. So it's really open, and there's huge, call it blue sky, aside from the stuff that we know, we have a good deal of understanding of, and we think it's there. One key thing that I didn't mention, which I must, is the fact that we have a starter pit. Okay, and so early years of mining economics are key, because that's time value of money, and if we can pay back our capital quickly, then this mine becomes very interesting. This right here is a multi-decade mine. It's a sort of this is a 25-30 year mine life, but the first years are going to be very profitable, because we've defined 11 million of the 100 million tons is within our starter pits, and this is what it looks like from a bird's eye here. One pit, bigger pit here and a smaller pit here. This is what it looks like from a plan view. This is how deep it goes. Why does this exist? Because the mineralization comes right to surface. So those veins that they mined at Falcon Bridge Mine are still there here in the crown pillar. And the crown pillar is the ceiling of an underground mine, and it was particularly thick here because this is where the mill was. And so they had a very thick crown pillar. So we get, not only do we get the disseminated mineralization here, we get the high grade sweeteners. So our capital is paid back within this. This is 3 years worth of production. So this is extremely crucial and beneficial and unique to this project. Metallurgy is critical for any mine. It can kill your project instantly, but we have 50 years worth of mine level metallurgy. They produced a very clean, marketable concentrate, very high grade copper with gold and silver payable. We expect the same sort of metallurgical issues or non-issues, benefits, I should say there. Again, I'll note the plan is to do exactly what they did for 50 years, is to put it on the rail, the concentrate that is, and then ship it to Rouen, to the Horn smelter, and have them refine it there. I should note that we're updating all of our metallurgical tests as well, in the context of this being a bulk tonnage operation, as well as the metallurgical processes have come a long way since you see here in the 50s. It's gotten a lot better. Briefly, I'll touch upon our Roger project here. This is just as a refresher. This is our satellite deposit here. We acquired it out of a distressed situation. There's a company that needed cash earlier this year. We gave them an aggressive offer, and we bought 50% of it. The other 50% is the Quebec government, who are our partners, which is a good partners to have. It is it's open, it's got room to grow, no question about it. You can see it's pit constrained, and there's mineralization there that needs further drilling to bring it into a optimized pit. It's not going to be our area of focus. Again, I emphasize this right here, this 5-6 kilometers, our area of immediate focus, but expect us to put some meters into this in the second half of 2022 and build the resource there. The other sort of kicker we have here, of course, is baseload. I mentioned it earlier before. It's such a phenomenal company run by James Sykes, who's a guy I recruited to run it. Look up baseload, listen to James if you're interested in the uranium space. He is the real deal. We made a discovery, a grassroots, brand new discovery. We released the discovery hole about 2 or 3 weeks ago. Today, we followed up with holes 2 and 3, hitting more high grade uranium mineralization. This is before that, about 30 days before our discovery hole, our neighbor, an Australian company called 92 Energy, did the same thing. So you can see our discovery holes happened nearly at the same time, drilling into the same system, 450 meters away from each other. We believe it's the same system. So this will eventually have to come together under one roof, but this is early days. Baseload has $11 million in cash and is going to be drilling this aggressively. So this is very exciting, and for QC Copper to have such a big position in it relative to our market cap. I mean, that's just a uranium kicker, as we call it here. Catalysts going forward, expect us to start drilling very soon. We're talking weeks. We've got cash in the bank. What's that?
Oh, I said nice. I like how you're doing the story trading method. Fundamentals, now catalysts. Beautiful.
Catalysts. Well, catalysts are important in this, as our sentiment too. And the sentiment for copper has been sort of weak, but it's coming back. Like copper it's caught a bid this week, which is great to see. But we don't control the copper price; we just benefit from it. What we do control is our ability to drill this out, and we're going to be aggressive about it. As I said, we have an opportunity here to develop a world-class mine. If we don't get it, our fallback position is this. Okay, and this is a mine. So, but we have the optionality to be aggressive. And it's sort of a relatively, I'll call it a risk mitigator. There's no sure things in this business, but we do know that it's heavily mineralized, but we got to drill it out, prove it up, and then put the economics on it, which we will start towards the end of 2022. We've got a couple other tricks up our sleeve, which you'll be seeing in the near term, which are all positive things. But at the end of the day, we're working this towards a construction decision. We do believe this is a mine. We do believe this can be built this cycle. There are, big deposits, call it, multi-billion ton deposits down in Peru or Ecuador, which are phenomenal, but those are 20-year, maybe 30-year construction cycles. This can be built this cycle. The infrastructure is already in place. The understanding of the resource, especially given it's 82% measured and indicated, is right there. We have the benefit of being in Quebec. We check all the boxes, and we're still cheap. Everyone, we are still cheap. So there's still an opportunity to get into this story as we build momentum and as people find out about us, because nobody knew about us 2 weeks ago, except for Chris and Ben, who picked us up. They were early, and there were definitely some smart people that were there early. Okay. But we haven't even hit our stride yet. Key guys, I won't spend much time. Like, I got to emphasize, people aren't always exciting, but I got to emphasize, people are absolutely critical. The key guy to me is Charles Beaudry. He is the individual who sourced the project, identified the bulk tonnage scenario, and has taken it to this stage. He sourced it because of his relationships with the Gaucher family. I was represented on our board by Pierre Gaucher. Pierre's father, Edwin, they're a 3-generation mining family in Quebec, very well known, very well respected. And Pierre's father gave Charles his first job. And Charles had been sort of consulting on their management. That his family owned it for 30 years until we acquired it from them in 2019. So that's a little bit of the provenance about how we got it. We built QC specifically to acquire this project. And it was a combination of trust, ability to raise capital and move it forward that gave the Gaucher family confidence in our group that we could take it to where they know it can be. And we've come a long way. And so, with that, I'll end it on this slide. It's my favorite slide. It shows very clearly what we've done, what we've accomplished to date, and some of the opportunities which we think are very low-hanging fruit. All of this mineralization is known. We just need to drill it and redo the pit, which is something is going to happen throughout various periods throughout 2022. So with that, I'm happy to answer any questions anybody has.
Great. Thank you, Stephen, so much for that presentation update. I just wanted to point out, I had no idea. I was quite busy with some other things this morning. I had no idea what happened at the base load here, and doesn't really look to me like the market took that into account with recent price action on QC. So I appreciate that update. Chris, I'll start with you. Got any questions?
Yeah, regarding baseload, in the share sale, have you negotiated a price yet with the buyer? Is there a price?
Yes, I can. I've had, thank you for that question. Happy to go on the record. I've had about 100 emails about it today. And people are curious about it, but the reason that hasn't been disclosed is because we are a control block position. And when you're a control block position, there are different rules. So just give me a few more. Well, I won't define the period. Very shortly, we will have all of those details, but I cannot discuss it right now.
I think maybe what you can answer, which I think maybe what Chris and some other people are getting to, are you able to kind of describe for us if you were able to take advantage, of the big move today? Like, did he get screwed 2 days before, or did he? That's kind of.
Let me just say that, again, I cannot comment on it. I would just say that our shareholders will be very pleased with the price that we get.
Happy to hear that. Okay, thank you.
All right. You mentioned you haven't digitized Robotel or Cook yet. You spent several years digitizing Springer Perry. When will that work be conducted and completed?
So just a correction there, we took over this project in 2019.
Yes.
Ourselves as QC Copper. We spent, I would say, about 18 months digitizing Springer and Perry with modest means. You know, it was a lot of work.
Yeah.
A lot of work, and we're already working.
Wasn't that on top of years of XIN's work, though?
XIN, okay, so XIN, just to sort of clarify, XIN had this project for 30 years. They did work on it. They sort of treated it as their, you know, their weekend project, if you will. They run a business, a very successful business, and they're in the geophysical hardware industry. And nobody, you know, had the full-time job to tackle this. And believe me, this is a full-time job for a team. Nor did they have the capital means. And so they, you know, they raised, you know, $200,000 a year from friends and family and moved it forward like that. This required, you know, huge resources, time and money and skills, which weren't available to them, and hence why we convinced them. So all of their work, you know, we didn't use any of their work. We took all of the raw data from Falcon Bridge, tore it down, built it back up, and digitized it. To do what you see right there took 18 months. You know, with one guy doing it. You know, now we have better means. We've learned a thing or two about the process. I don't think the Springer and the Perry, or excuse me, the Robitaille and the Cook are going to take nearly as long. We've already been working on it. So okay. It's not going to take nearly as long.
Okay. When I started following you, I think the cutoff grade was 0.25%. So you've lowered that to 0.2, I guess, in response to movement in the price of copper. Is that correct?
That's not our decision. Okay, so the company is not involved directly with the cutoff grade. That's a decision made by the QP, which is the independent QP, which is P&E Mining. They are the authors and publishers of this report that we came out with on September 20th. They used trailing copper prices. They used $3.50 copper, and they used $16.50 gold. So those are their assumptions. So all the cutoff grade is based solely on those prices. So that's really the key number. The key numbers is not learning those prices. And then obviously, you know, you have to make some assumptions about mining costs, et cetera, of open pit mining in Quebec. And there's lots of precedent for that. There's a lot of open pits in Quebec. So they have a good handle on those costs. So that's how the cutoff grade was formed. There was discussion earlier. You're right. You know, maybe a year ago we were talking about it at a 0.25%, but Eugene, well, I'll just say P&E came to us and said we think it's 0.2, and in fact they think as we develop, we think we can push it down even lower. But that's not our objective. But those are things we can work through in the future.
Could we interpret that as rock with 0.2% copper in it is economical at $3.50?
So yes. So if we were, these are all hypotheticals, of course, but like these are not hypotheticals, but just sort of examples. If we were mining and the copper price was $3.50 and the gold price was $16.50, that would theoretically mean anything under 0.2, you are losing money on. Anything over 0.2, you're making money on. Considered ore. So anything over 0.2 is considered ore. Anything below 0.2 is considered waste.
And anything over 0.5, you're making a lot of money on.
You're making a lot of money. And when your average grade is 0.85, that's 4x. You're in fact more than 4x your cutoff grade. So it's high margin. Thank you.
Let's see. We have a question here about how pricing might progress. I mean, at 100 million market cap and 1 billion pounds of copper, the market's valuing that copper at about 5 cents a pound. That's like a very speculative explorer price pre-copper bull. I don't know. Do you have anything to say about how your copper might be valued in the future as you progress?
I don't want to get into prognosticating prices on anything. What else? First of all, I'll say we got 2 billion pounds of copper. And I think that the junior mining industry is one of the most mispriced industries in the world. To the upside and the downside, that's the opportunity if you can identify the mispricing and look at the real value. So the question to me is about value. When we came out with this report on September 20th, I mean, I knew we hit it out of the park. I also knew that we weren't going to go up 10x on that Monday. It takes time for people to believe, first of all, find out about the opportunity, then understand it, and then believe it. And so it didn't happen overnight. It's we've been about 3 weeks into this, and we've continued. We've had, look at our volumes. We've had strong volumes, continued strong volumes, and continued good momentum. I think there's only been 2 or 3, maybe 4 days that we've actually traded down. So I think we've got momentum on our side, and I think there's plenty of room to grow, especially as this story gets out with the help of groups like this. I mean, this is what I've been spending a lot of my time, is just communicating and getting people to understand the difference between the price and the value. So we got a ways to go. I think, I am on the record. I think if you look at the comparables, I mean, a lot of people don't understand copper. Okay, so even if you're into the mining industry, people don't know what 2 billion pounds of copper means. Well, I mean, that's over 8.5 billion pounds of gross value metal. Okay, but still, it's hard for people to quantify. People understand gold. So if you were to take our copper equivalent and translate it into gold, that's 4.75 million ounces of gold at an average grade of 1.4 grams per ton. That's huge. And the measured and indicated category, that's as big as Malartic, which is Canada's largest gold mine. That's as large in terms of ounces as their maiden resource, much higher measured and indicated, and their average grade was a gram. We're at 1.4. I emphasize we're a copper project, not a gold project, but I referenced that as a benchmark because there are no comparables in copper, certainly not in North America that we can see that have this size, growth potential, infrastructure in place, margin, and being in Quebec, there is no better place. So I do believe we are just at the very beginning of our story.
Okay, I wouldn't disagree. Another one, aside from a drop in the price of copper, what do you see as your major risks? And as a corollary, 3 weeks ago, would you have considered getting your funding out of the way, the major risk?
Well, the ability to raise capital is absolute, paramount in this industry. If you could have the best project in the world, but if you don't have the ability to move it forward, nobody cares about it. And of course, I think our broader group has demonstrated the ability to raise capital, not just in QC Copper, but in other companies like Baseload, for example, which I'm the founder of and largely responsible for raising the capital. That company's got $11 million in it. I just raised $6 million for another one of our portfolio companies, which is my primary function. I mean, I am responsible for raising the capital, and I trust guys like Charles to do what they do best with the rocks. So, the availability of capital is a significant risk for all companies. The fact that we, after these transactions, like let's just say we have well over $15 million, maybe as high as $18 million, depending on what, I announced with the Baseload stuff, in our treasury. And a lot of that was non-dilutive in terms of the Baseload transaction. And then to do that 60-cent deal with no warrants, I mean, yes. Phenomenal.
Yes.
So we've got a healthy treasury. And then, what do we do in terms of managing and growing our story? Well, we drill. We deliver news flow, interesting intersections, and obviously all culminated and again in an updated resource. So access to capital, copper price is the biggest risk. If this goes, copper goes down to sub $2, we'll probably consider, we'll continue on our course and drill this thing out. But I think the share price would obviously be impacted if copper goes to $2. I don't think any of the so-called experts are calling for that, but look, anything's possible. We've learned that. So I think it's vastly more likely we see $5 copper, like in fact, we could see it any point in time now. And, that will, just add to the multiple achieved to us. And then of course, like any project, any open pit, the ESG component is critical. Getting social license is something that we've always taken very seriously. We've addressed everything head on, brought in the communities, particularly the First Nations and, the local communities. This is a mining culture up in northern Quebec. It's forestry or extraction or not much. And everybody understands that, including the government, who has a streamlined permitting process and is supporters. I mean, they're shareholders. The Quebec government is not only a direct shareholder in QC Copper, they're also 50% partners in our Roger project. The Quebec government, through various, call it arms, is well known for financing. When it comes time to construction, you need a 9-figure check. The Quebec government is there. And so they're good shareholders. They understand the value that the economic and the employment opportunities that extraction brings. So those are the primary risks that I see.
Yes. At what point will permitting and community buy-in become a factor and a risk?
From day one, you know. And so when we acquired this project back in 2019, we approached the community and we told them exactly what our plans were, and that was to put an open pit mine here. And you know, we had a lot of questions. You know, people want to know, how does this impact this, that, and the other thing. But you know, this is a mining town. The people in Chapé and Chibougamau, which are the sort of villages around in the Chibougamau district, their parents, their grandparents worked at the Opemiska or the other mines in the neighborhood. And I believe that they are welcoming of the economic opportunity if done correctly. And it's done correctly by us communicating, providing opportunities, you know, bringing them into the tent, so to speak, giving them jobs like we do with the First Nations who have been our drill contractors, our service suppliers, etc. So, you know, as long as it's done correctly, and open pit mining in Quebec has been done many, many times, so it's not foreign to people. This is a common thing, and provided the call it economic benefits are there for all, this is a win-win, I believe.
I picked up somewhere that, oh, sorry, you had something?
No, please go ahead.
I read somewhere that Falconbridge left in the crown pillars because they didn't want to leave behind unattractive sinkholes. Now you're going to be putting in an open pit next to this community next door.
Correct.
That's really, they're clear on that, and they've bought in.
They are, absolutely. Since day one, we told them exactly what our plans were, and they have so far welcomed us with open arms. They understand the trade-offs. There's precedent for this all over the place, whether it's Malartic, you know, the Osisko, whether it's Detour, the similar situations. You know, look, open pit mining is an eyesore. There's no disputing that. But you know, people overlook that sort of thing in order for extraction or employment opportunities. There's just not a whole lot of those types of opportunities in this part of Quebec. We are in very northern Quebec, despite the infrastructure being so good. There's not a lot going on. So you know, this is a mining community, and so it doesn't scare them. Do we have to be careful? I mean, of course, we have to do it right. And I believe we've done that. Are we going to ramp up our efforts? Now that we have a mine, we've shifted our focus away from being an exploration company, you know, towards thinking about, okay, you know, where do we need to pay attention? What are the foundations we need to lay so that this becomes a mine? And, you know, it needs forward thinking. So, you know, you'll see some developments on our bench strength, meaning our team. We are talking to people who have built open pit mines in Quebec before to get their expertise. I've never built an open pit mine in Quebec or anywhere for that matter. I'm not a mine builder. I'm a resource developer. But expect us to bring that expertise in-house soon.
What might be a point where you'll consider selling this mine?
It's not something I think about, you know, in terms of timing. You know, look, if we were a $3-4 stock, I'd be thinking about it. In fact, I'd be soliciting offers. But I'm not even thinking about that yet. There's way too much value to be built before I start thinking about selling this. So not today, not anytime soon, put it that way.
Okay. Here's one. Do you have a roadmap for the capital spending plan for the next 12 months or so? Yeah,
so we're going to be drilling in about 2 weeks. So we think we're going to get about 7,500 meters in between now and the end of the year. That's a modest program, but it's meant to set up 2022, which is going to be a robust, aggressive program. We know exactly what we're doing for the balance of the year. You're going to see us focusing, you know, going back here to Saddle Zone, the Eastern Veins, and some Perry holes. Okay, so that's where we're going to go. Everything I think about is where are we going to get the best bang for our buck in every single meter, and this is it. So we're going to drill this out until we understand we've brought as much of the geology into an open pit as we possibly can, and also consider some at depth potential as well from an underground mine. But, you know, to sort of answer your question on the bigger program, you know, we haven't yet finalized our plans. We have a general idea, but we're fine tuning it as we speak and working on all the logistics. So that's coming in the not too distant future, but not today.
Okay. When might the company be in a position to apply for a mining permit for the open pit deposit, if you go in that direction?
So I
how
would
long-
say, yeah, I mean, okay, so the first process in that is defining your project description, which is a document we're working on as we speak. That's step one. When you have a general idea of what you want to do, and that's a 12-page document, you submit it to the government, they come back, you know, 90 days later and say, you got to do A, B, and C. So we've begun that process now that we have this and we have a general understanding of what we want to do. Obviously that evolves, but this is the first step. Now, if we were to build a mine and we had no capital constraints, meaning, you know, we had Rio Tinto behind us writing all of our checks, I think we could be in production in 3.5 years.
Uh-huh. Okay. How long would that permitting process, I guess you kind of answered that question. Well, how long would that permitting process take? And
3.5 years. I mean, you know, that's,
yeah.
you know, it's you know, until you're producing, you know, I mean, you know, look, that's just sort of a tongue-in-cheek response, but I mean, you know, you're permitting, you know, all along that process. You know, maybe, you know, a year before, you know, maybe it's 2 years because, you know, you got your permitted, then you got your construction financing. But look, it's a, you know, it's a multi-year process to permit any industrial project in this day and age.
Assuming your end game is to sell the mine to a tier 1 producer, how much would pushing the project down that permitting process raise the final buy price? How much?
It's possible to say. You know, the macro elements is more impactful on that than anything. You know, if you sell it at $6 copper, doesn't matter if you're 2 years or 5 years away. If you sell it at, you know, and the same, you know, the opposite inverse is true if you sell it at $2 copper, right? So, you know, you have to consider the economic headwinds or tailwinds. So, which we do not control. And so what do? We move the project forward and we bide our time. And, you know, there's little doubt that as you get closer to, call it de-risking it, you know, the project value goes up. If you're really lucky, you know, copper performs in parallel with that, but you're not always that lucky. But hey, you know, again, that's not our control. All we can do is move this forward aggressively and intelligently. And, you know, I think, you know, we are very cognizant of the cycles of this industry. And so we're going to position it so that we are in control, so that we don't have to sell it if there are macroeconomic headwinds in 2023 or 2024. We will just sit tight. We know what we have, and we will maximize the value.
Do you think you'll have a chance to note to Crux investors that the funding environment actually hasn't dried up?
Well, I think our news speaks for itself, and obviously when those closes, which are closing on the 27th of October, the Cormark financing, that is, you know, look, I'll send Matt a tweet. How about that?
That sounds good. So I think that's about it for our questions.
Okay.
Thank you, Chris. That was great. I do have one kind of housekeeping thing, Stephen. There's something you may be aware of. It's Rule 15C211 from the SEC impacting some over-the-counter stocks. Do you know anything about that? And are you guys clear of any issues there?
Oh, geez, I don't have my rule book on me. So if you enlighten me on what that specific section is about, maybe I can comment, but honestly, on its own.
Chris, are you aware of it? It has to form 211.
You have to be currently reporting. I don't think it's a problem for you guys. It usually isn't for stocks on the OTCQX, which you're on.
Yeah, we are. You know, so look, I'm not an expert in the SEC rules, and you know, I know some of them, but not all of them. We are traded and quoted on the OTCQX, so we are blue sky, as they call us. So you know, it makes it nice and easy for our friends, our best friends down south, and to trade us, which is exactly why we upgraded our OTC listing. So
as far as you know, all your filings are up to date.
100%.
Okay. All right, great. And I don't know if you commented before, were there any plans to kind of try to uplist to NASDAQ one day or over OTC? Not NASDAQ, even the OTC, drop this F over here. I don't love it.
If, if I'm convinced that it adds value or
Mhm.
our American shareholders are, demanding it, nobody's asked me to. I've
Oh,
never-
okay.
But look, it's a huge expense and an
Oh, I see.
administrative burden to get your OTC listing. But, again, to ignore the world's largest market is a mistake. So
Mhm.
if we can add value by making it easier for the Americans to trade our stocks, we'll expect us to pay attention to that.
Mhm. Okay, cool. Appreciate that. All right. Any other questions? I think we're good. We're about this 40 minutes. So I think we're going to wrap it up here, Stephen. Really thank you for your time.
My pleasure. Thank you for the opportunity, everybody.
Great. Thank you. And
Thanks, Stephen.
yep. And if everyone can just hang on for just a couple housekeeping notes. If you're not a VIP member, you can go over and upgrade at StoryTrading.com, and you can collaborate in the QCCUF research group. We have lots of events coming up. We got a story trading contributor, James Ticknor, on the ground at the LD Micro Conference in Los Angeles, is going to be giving us a live update at 4:30 p.m. tomorrow. And follow us, please, on YouTube and Twitter. And we're going to open the line for happy hour after this. It's a regular scheduled time for that. So thank you again, Stephen.
Thanks, everyone.
Yep.
Talk soon. And if anybody has any questions, I'm easy to reach.
Great. Thank you.
Take care.
Bye.